What's going on, guys? It's Jimmy here. So President Donald Trump just announced something very interesting that a lot of people are going to take. It's a 50-year mortgage. And, well, you can let me know if you think this is good or bad for the country. Let me know right now in the comments section, or good for people, because a lot of people are going to take this. This happened when the 30-year mortgage just came out, and it is now the norm. And as homes are getting more and more expensive, people are going to start taking these 50-year mortgages. We're starting to see this with car loans, where instead of a 5-year car loan, people are starting to take 7-year car loans and 10-year car loans. But I'm going to show you why this is a major problem, but you might not know, and why this actually may crash the economy and the housing market like it has actually done before. So I'm going to show you right now, because we're live right now here on the YouTube It's Jimmy Show. Let me know if you can see and hear me. Type yes in the chat. Let me know where you're tuning in from. You can let me know your city, state, or even your country, as we have people tuning in here from all around the globe. Don't forget to hit that like button for me here. And if you haven't yet, subscribe down below so you don't miss out on future videos. I will keep you up to date. Take a look here. So President Donald Trump just actually released and told the government to now start releasing 50-year mortgages. Is this a good idea? This is also coming as 7 and 10-year car loans are also coming out and starting to become the norm. And think about a 50-year home loan, first of all. If you buy it at age 30, which is pretty young to buy a home, you're going to pay it off and actually own it at age 80. 30 plus 50 years is 80. If you buy it at age 40, 40 plus 50 years is age 90. God, we all hope we even live to age 90. If you buy it at age 50, age 100 is when you will actually pay off the home. This is starting to get insane. The problem is that home prices are starting to get insane that people can't afford them. You know that old saying, you will own nothing and like it? Well, this is what is actually happening. And the Trump administration is releasing this 50-year mortgage to try to make the American home affordable for people again, but it's creating a massive problem in a couple different ways. First of all, look at this. Here is a mortgage calculator for a 30-year loan on $425,000 home, okay? Just for simplicity, no down payment, a 6.3% interest rate, which is what it is now. We're not going to include property tax. We're not going to include PMI or home insurance or monthly HOA, so all that would be extra, okay? $425,000 is around the average cost of a home nowadays. In some places, it's a lot more, and in some affordable areas, you can get homes for less than that. But $425,000 is around the average. You can let me know in your area how $425,000 is. Is that a good home? Okay. Now, a 30-year mortgage leads to a monthly payment of $2,630. So for round numbers, we'll say $2,600. That's at 6.3%. Now remember here, that does not include your property taxes. That does not include your property taxes. And we all know that property taxes are getting sky high, so that could easily raise that to over $3,000 a month or more. Okay. Now here's where things get interesting. Okay. When you look at the total amount of interest you're going to pay on this 30-year loan is $522,000 just in interest that you'll pay off by the year 2055, 30 years from now. The total amount you'll pay of the interest plus the $425,000 for your home is almost $1 million, $947,000. Yeah, so you'll actually pay more interest than you will the home is worth. Yeah. So just think about that. Okay. This is at 6.3%. Okay. Remember, mortgages were just at 8% not too long ago, maybe 2 years ago. Okay. So this is at 6.3%. And I'll show you why the interest rate matters so much here in a moment. Okay. But first, now let me go to the exact same mortgage calculator for 50 years. The same home, $425,000, same interest rate, 6.3%. And now the payment is $2332 instead of $2630. So if we round here, it's $2300 instead of $2600. Okay, so it's only $300 a month less, but you have to pay it for 50 years instead of 30 years. Remember, this does not even include property taxes, home insurance, monthly HOA if you have that, or PMI, or any additional stuff. However, because you're paying on the loan for 20 more years, look at the interest. Now you're going to pay almost $1 million just in interest, $974,000 in interest. And the total paid, the $425,000 for the original home, plus the almost $1 million in interest, brings it to just under $1.4 million total because of you're paying on it for 50 years. So the total of $1.4 million almost compared to just $947,000, which is still outrageous, is what is this, $450,000 more, which is more than the cost of the home. Remember, the cost of the home is $425,000 because you elected to go for a 50-year mortgage instead of a 30-year mortgage. Okay? So just let that sink in here when you look at these numbers, because that's insane. That's insane. And you're going to be paying on this mortgage for 50 years. For 50 years. Yeah, absolutely insane. So why anybody would take a 50-year mortgage is beyond me. And the only reason I could see somebody taking a 50-year mortgage is because they haven't done the math, or it hasn't been explained to them. And they're just being sold a product that they're being told is $300 a month less, and that they can afford the house now, or they can afford a bigger house because it's $300 a month less. Not knowing that they're going to pay $450,000 more in interest, and they're going to have to pay on the home for 50 years. Is that not mind-blowing, or what? This is honestly how people stay poor their whole lives, because they're going to pay $1 million in interest alone on a $400,000 home, and they're going to pay for it for 50 years. The people who are getting rich are the banks, and they're literally stealing the American dream from Americans. And if you've listened to me in the past, you know that interest rate really matters, okay? If we go back several years, like before the pandemic, maybe 5 years ago or so, interest rates were around 3%, in some cases actually in the 2% range, okay? This is why I want to show you how much interest rates matter. Now, I know we can't get 2 or 3% interest rates now, okay, but if you locked in your interest rates back then, let me show you why interest rates matter so much, because this also pertains to credit card interest rates, car interest rates, mortgage interest rates, personal loan interest rates. This is why you have to watch your interest rates when you're paying any type of debt back, or if you're investing, if you have a CD, a money market, a savings account, the rate that you're getting really matters. Take a look here. So let's just go back to this 30-year mortgage here, $425,000, 6.3%. Okay, the monthly payment is $2,600, as you can see here. Okay, if we go at 6.3%, if we go down here to a $425,000 mortgage, same mortgage at 3%, the same house at $425,000, but at 3%, the monthly payment now drops to under $1,800, $1,791. This is on a 30-year. Okay, So 1791 on a 30-year. And the only thing that changed was the interest rate. It went to 3% instead of 6.3%. At 6.3%, it's $2,600, $2,630 on a 30-year, as opposed to less than $1,800 on a 30-year. So this is like almost $850 a month less every single month, just because the interest rate went from 6.3% to 3%. This is why interest rates matter so much. So much. Okay? So the annual amount you pay on the 6.3% is $31,500 for rough numbers on the 6.3%. On the 3%, you're only paying $21,500. You're paying $10,000 a year less, okay? And the total interest you're going to pay over 30 years is $220,000 on the 3% interest rate. Where on the 6.3% interest rate, you're going to pay $522,000 versus $220,000. So you're literally going to pay $300,000 more in interest just because it's a 6.3% interest rate versus a 3% interest rate. And these are both on 30-year loans. Don't even get me started on the 50-year loan. Okay? So just from going from a 6.3% interest rate to a 3% interest rate is $300,000 more in interest. And you can see that here with the total amount paid is on the 6.3%, $947,000 versus the 3%, $645,000. Now, this applies to everything. Your credit card interest that you're paying 20% on, 25% on, 30% on, anything you're paying interest on is literally just eating away your money. It's eating away your finances, okay? You ever heard the term the rich get richer and the poor get poorer? It's because of math like this, okay? When you understand math like this, you can use it to your advantage, okay? So what the rich do is, and you can kind of learn this from like Rich Dad, Poor Dad book, which is kind of right here. It's one of the best books you can ever read, is the rich will take their credit cards and they will pay them off in full every month. So if they go and they charge $1,000, they pay it off in full every month, and then they actually get rewards from using their credit card. Okay, so if they charge $500, they pay off their $500. It just comes out of their checking account, pay it off. If they charge $1,000, they pay off their $1,000. They, put their gas on there, they put their groceries on there, whatever, and they pay it off in full. They pay zero interest. Zero interest, okay? And then the credit cards actually pay them for using the credit cards and give them rewards, whether it's cash back, travel miles, whatever, hotel miles, whatever the card is giving you. It's literally, they're paying you to use the card. You literally pay zero interest. You can set it up on auto pay, pay in full every month. Just take the money out of the checking account, leave enough money in your checking account, okay? Rich get richer, poor get poorer. Where the poor are paying 20% interest, 30% interest. Now remember how much interest was on that home at 6.3% interest, 6% interest. Now think about the credit cards that are charging you 20% interest or 30% interest, how detrimental that is going to be to your finances when you pay on them year after 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 year. And now you realize how the banks are so powerful and so rich and how they have billions or even trillions of dollars because they're making trillions of dollars in interest. Okay, so if you want to get financially secure, first thing to do is pay off your credit cards that are charging you 15, 20, 30% interest. Get rid of that as soon as possible because that is literally just like driving down the street. If you've watched me for a while, you've heard me say this before. It's like driving down the street and taking some $20 bills and throwing them out the car window. Okay. That's what credit card interest is like, because it's just so expensive, and it's like spending $300 on groceries, but actually spending $400 on groceries because you paid $100 in interest. Okay, so when you can get out of that debt, when you can get out of that interest which you're paying to the bank, when you can just kind of whittle that away and get out of it, it's just going to save you. It's just going to help you. You're not helping anybody else but yourself. And a great method to do that is the snowball effect, where you might not necessarily pay off the highest interest card, but start with the lowest balance card. Okay, because what will happen is if you have a card balance with just a couple $100, pay that one off as soon as you can, and then you no longer have that payment, that monthly payment. Okay, so then you can take that payment that you were having every month, whether it's $50 or whatever it was, and then you can take that $50 payment and then apply it to the second credit card, and then make double payments on that card. So it's kind of a snowball effect, because now you're making two payments on one credit card. Okay, so it's a snowball effect. And then once you're starting to double pay on that second credit card, and you'll pay it off twice as fast. Do that on the second lowest balance card. Okay, and then you'll pay that one off twice as fast. And when you pay that one off, then you can work on the third lowest balance card. I don't know how many you may have. Okay, but that one will get paid off 3 times as fast, okay? Because you're not just paying minimums on each one, right? You're actually working on paying off the balances and getting rid of that interest. Remember, when you pay a balance in full every month, there's 0 interest. In fact, you'll get rewards from the credit card company if it's a rewards card, which a lot of them are nowadays, okay? So let me know your thoughts here in the comment section. Also, this is very important for those on Medicare or for those who have loved ones that want to be. Pay attention. The annual open enrollment period goes from October 15th only until December 7th. If you have Medicare, this is the time to choose your new 2026 plan that works best for you. There has been a lot of Medicare changes recently, and most Medicare plans change, and many just go away entirely. Luckily, my trusted partner, Chapter Medicare, makes comparing every Medicare and Medicare Advantage option easy. They're honest, unbiased, and can review your plan and get you the best one in under 20 minutes. If you're on the right plan for your needs, they'll tell you, and if you're not, they'll help you switch. And by doing this, they've saved people on average around $1,100, which is amazing. They've helped hundreds of people from my community find better plans, and they can help you too. So call this phone number on the screen, 833-700-1320, or click the pinned comment down below in the comment section to connect with Chapter and find the plan that's best for you. So make sure to share this video with anybody that needs to hear this information. Share it on social media and subscribe down below so you don't miss out on future videos, and click the bell icon so you get notifications when we go live. Click here to see a major bill that just passed, which is going to provide billions of dollars for Americans, or click here to see new details on Trump's $2,000 stimulus checks. Thanks for watching, and I'll see you